Yo, shake my hand, 365. Hope you guys are doing well. I'm a little bit tired, but we gotta break this stuff down, guys. So this video is really, I guess, it's gonna benefit a lot of people, but it's really for you guys, right? So registered students, all the questions we had last night during the live conference, the way forward, what I think the next step is, how power is gonna move, how the dollar is gonna move, Euro USD, what exactly happened yesterday. First of all, I personally think we need to do more of these. We need to kind of like sit through all these live FOMC meetings together. So yesterday, I was just kind of like typing as quickly as I could on Telegram, but I think in future, I should just host it on our 365 YouTube channel, stream the actual live conference, and then I can just pipe in, and then you can see my live screens and all that kind of stuff, and we can see it might be worth doing, right? So I just want to quickly, in this video, I've got a couple of things I want to do. Number one, give you a full summary of the taper. Been waiting for the taper. Finally got a taper, all right? And then maybe talk about what we expected and what's happening, what's going to happen. Are we still on track? Right? The common question that I got on the private Telegram was, should we still hold? Right, and it's a good question, I want to address that. The other question was, a lot of you guys started talking about trail stopping your profits, especially on Nasdaq, right? So you guys, some of you are in Nasdaq, which is awesome. How do you trail stop the profits? Why, etc., etc. And then I want to just break down FOMC. Someone spoke about NFP as well tomorrow, right? And believe you me, I'll explain how everything is going to affect crypto markets. So I'm so glad this happened on the 3rd. Well, I kind of knew it did. The meeting was going to be on the 3rd. So that's why I have not yet sent the November Wall Street 3-year stock notes, because this is very important, right? So we now know crypto can maintain a very strong bullish course, fundamentally speaking. Crypto can maintain a very strong bullish course from between now up until June, up until this taper is over. Because remember, you taper because your belief of inflation might not be transitory, or inflation might be long-term. That's why you taper fundamentally. And tapering is just the killing of the stimulus package. Reduction of US dollar printing. They've been doing about $120 billion per month of stimulus money, but I'll break all that stuff down. So that's why they wanted to taper. And so as long as there's that inflation fear, crypto becomes an inflation hedge. So we should see a continuation of the bull run. Naturally, there'll be ups and downs, bad weeks, bad days, but overall, most of our long-term strong coins, the uptrend is golden, right? So you should be watching out for that. Watch out, Bitcoin and Ethereum. It's November. It's bound to explode, right? It's bound to explode. XRP, it's bound to explode. I'm in the Wall Street 3 years program. You're going to get the financial notes this weekend. If you kind of like got last month's financial notes, that's good. I'll be adding. Remember, every month I tell you what I'm investing in a month to month. So I'm finally ready now to make my picks. I do think we've got some very, very good short-term winners and obviously long-term winners. So if you, link somewhere there, Wall Street 3 if you want to get into that. Right, let's talk about what did Powell say, number one, and I think just seeing my face as a reflection is a bit weird. So let me just switch to the whiteboard and reduce that. Right, so yesterday Powell came through and did the most, right? But if you guys remember, we marked out a lot of these things. So it's not just about the Powell event. We really need to kind of like learn to start to kind of like break down the actual market, all right? And by break down the actual market, there's a lot of stuff literally leading towards Powell. So with some data in the afternoon, with ADP yesterday, with ICM data yesterday, just all of this before Powell spoke, right? And I think we had something else a couple of days ago, but it's fundamentally all of that leads to one specific long-term plan. And then we had an interest rate decision at 8 p.m. just before Powell spoke, right? And all those things are kind of like instantly linked. So let's kind of like just quickly break that down right now. So let me quickly share my screen. Right, so you guys, obviously you've got this document, right? Especially private students. Anyone who's going to get access to a remote course, you know the drill. It's inside the remote course and financial notes. So we spoke about these big things coming. On the last week, Thursday, this was a fail, negative. I think this price didn't move at all. So the focus was this, and this was the same result. I mean, it's not that important, but if you want me to be very specific, I can be. Just simply have to check it for Forex. So looking on the 29th of October, I remember it just been an equalizer. 29th of October, USD. Yeah, I see the forecast was 0.02. The actual was 0.02. So markets chilled, right? Because price always consolidates just before a big news event. So just remember that. On the 1st of November, which was Monday, with the ICM PMI, I think that was positive. I could be wrong, but I was in some counter trend, very short-term counter trend, because that was quite positive. I could be wrong though. Yeah, they positive, right? So we saw a very short-term rally. Yesterday, ADA, very positive, right? Yesterday was Wednesday. ADP, like that's a very big job beat. It's a very big job beat, right? And then at 3 p.m., PMI. No. What I want to do is explain tapering to the meeting, but what you as a trader, what you're going through as a trader. If you're following me, if you're just watching this stuff by yourself, because remember, we all came with certain perceptions of what the market needs to do. All right. And so by 4 p.m., when ICM PMI data comes through, you see that they're positive. Oh, anytime it's positive, we know it's good for the currency. If it's good for the currency, the dollar is going to go up. If the dollar is going to go up, Euro USD sells, Pound USD sells are going to keep going deeper and deeper and deeper. The selling will continue because the dollar is strong. And so this is literally what we're focused on. This stuff, crude oil inventories, this didn't matter. It didn't affect anyone. And then while I was in class last night, I was trying to conclude our class last night. We were talking about Fibonacci 50% body candles, what I think was going to happen, and etc., etc. And as I was trying to wrap up class, because I actually thought FOMC press conference was going to be streamed at 8 p.m. So that's why class was supposed to end at 8 p.m. It was actually 8:30. But about 3:08, you'll see in the class recording, which I'll pop up in the remote course there. At about 3:08, while I was still trying to say goodbye to everyone, we saw a massive spike in Euro USD to the upside, which meant dollar was starting to become strong. And there are many there are basic reasons for that. No, sorry. Dollar is becoming weak. We saw Euro USD go up, and that's why the dollar is becoming weak. And remember, in my mindset, I'm like, oh my goodness, I have to go now because FOMC is about to start talking. So I'm thinking he just opened his mouth and said, the taper is over. We are not tapering. But if you look very carefully, at 8 p.m. yesterday, right, interest rates, nothing changed. And it was quite silly for markets to react that way. Number one, from a fundamental perspective, we expected interest rates not to change. If the Fed keeps telling you that they're going to taper, they're going to taper, they're going to taper, then they will taper, but you can't taper and increase interest rates. It's counterproductive, right? You can't do the same things economically at the same time. So tapering comes first. Then we look at the economy in June, July next year, 2022, which is what the Fed said, by the way, and then we can see if we want to increase interest rates. Markets obviously love interest rates. The dollar, once the more interest rates go up, the stronger your currency. So one would assume that Leroy at 8 o'clock, the dollar got weak because they didn't increase interest. I don't think that's the reason, right? Most professional traders expected this to stay as is. It was the same the other month, literally 0.255. They forecasted that it would stay the same, and it did stay the same. All pro traders, market analysis, we're pretty much clear that we don't expect interest rates to go up. So that's not why dollar got weak yesterday at 8 p.m. I'll show you why. But then conference started at 8:30 p.m., which I enjoyed to watch live. Thank you, ESCOM, for not cutting power. That was a tweet, right? So kind of like the build up. So the build up is, if you really look at the data, the result, we're expecting to taper, which means we're going to get a strong dollar, which means all our sales are going to go well on Euro USD, Pound USD. But before the taper, before the meeting, dollar has been getting positive news, which keeps it going with continuous strength, which is very important. We really have to put ourselves in that perspective of where am I as a trader? What's my analysis telling me to do? Because then we can start to earmark exactly what's going on. So I'm just quickly in the background trying to open the charts, but I want to cut out candles because I want you to see it the way it was presented last night. I don't want you to have an assumption of anything else. I want you to see it exactly in the way it was presented last night. If you just give me 2 seconds. Right. So let me share my screen now. My screen is ready for you. I'll share my main screen. You should be seeing charts in front of you. You should be seeing charts in front of you. Right. So this is the dollar last night. And this is the, I guess, the 1 p.m. candle on the H4 chart. So if you go to the 1 hour time frame, you can get a full breakdown. And this is 4 o'clock. 4 o'clock yesterday. Markets have arrived again. Look carefully now. Because this is why I always teach supply and demand. And I'll tell you, I actually went wrong yesterday. But I did say on the private group, I'm pissing off profits. I'm wasting my profits, you know, playing around with this 5 minutes. And we're going to actually break down those trades that I just took last night. And why, in general, I never do stuff like that. And I'm so glad I got a good slap in the face today. Why not to do stuff like that, right? But look at this. This is a bearish engulfing pattern. You know this. I taught it to you. I've also taught you that no matter what, structure moves first. No matter what, it doesn't matter. It doesn't matter if it's the president of the United States giving a live press conference. Money moves first. All right. So the dollar, and you must remember, let's go to the whiteboard, because this becomes extremely important. When I say this in war rooms, people are like, okay, he's doing that random thing of his, but they actually don't understand. This is the most important thing to realize, that you are in an internal war for the rest of your life as a trader, and you need to get this right as quickly as possible. This is something I can guide you on, but I can't change. And I'm going to use me as an example. Once again, there is Leroy, me, the person, the persona. Right. But then there's also someone called the trader in me, who generally likes to have a trader's mindset. The trader in me has to be disciplined, or is trying to be disciplined. The trader in me uses a trader's mindset. So I don't trade due to, you know, data only or analysis. I have a full trader's mindset. The trader's mindset is mechanical. And what that actually means is it's rules, it's robotic. If I was trading with a 365 bot, if I was using a robot, the robot would not have sat down and listened to FOMC's tone and FOMC's words and what the FOMC is saying. The robot would have simply traded the rules in its database based on the structure in front of it. Leroy was the problem last night, and I think a lot of you probably would want to put yourselves in that category. I knew there was a taper coming, so I knew dollar was going to be strong. I knew that because there's a taper coming, I've been very short on EURUSD. I've been short on EURUSD. My first sell on EURUSD, I'll tell you now if you want to wait. Sorry, let me just remove this auto scroll. Right, so my very first big trade on EURUSD is here, 22 September, give or take. That my pending order was triggered roughly around 5 a.m. And that's the oldest sell order I have on EURUSD. And then I've got another one right there on the 27th of September, another one right there on the 28th of September. Complicated 5 candles on the 29th of September. According to my journal, that's an H1 entry point, and then markets dropped and retraced all the way into a complicated series again on the 13th of October. And then there's a trade that we all should have been in last week Friday together, which was that daily 365 candlestick that we spoke about in the war rooms, and this was on Friday. I think we're triggered on Thursday, sorry, 28th of October. So I've been holding these massive sales for a very long time, right? So the reason why I'm selling EURUSD, because my structure told me to, that's number one, but also because at the back of my mind, Leroy knows taper is coming, so sell these things, right? So, and the same goes to pound USD, because one of them moves first and the other one follows, so it's nice to have that, right? So I've had this, and so I'm expecting, as Leroy, you guys track this in your journals. We all walked into that expecting dollar to be strong, because we knew, or we assumed, that there was a 90% chance that the taper was going to continue. This guy, all of this is good information. This is accurate key analysis. This is perfect. But this can never substitute what the trader needs to do. What the trader needs to do is to sometimes shut the analytical mind and take the trade that is in front of him or her. In front of us, if we can go back to TradeView, before I got into class, And I remember telling myself this. I genuinely remember saying, all right, so this is what's going on. You know, dollars at a supply, but the Fed is tapering. I couldn't shake that off, but the Fed is tapering. The Fed is tapering. And so the assumption when you're looking at a chart like this, if you do what I think a lot of you did yesterday or didn't do, is that you just automatically assume that dollar is going to be strong and just fly because of tapering. That is a fair assumption for Leroy to make. But as a trader, you cannot do that. As a trader, this is literally a supply, a beautiful supply. She deserves love, appreciation, and respect. You could mark out when this beautiful supply will come to an end, all right? And the beautiful supply can come to an end somewhere there. What have I done? All the candles back. We don't want all the candles back. But look, there was a somewhat of a demand somewhere down here. All right. So you could have done that if you wanted to. You could have said, you know what, that's good enough for me. Let's remove all these extra candles. We don't need them right now. Right. So you know, again, price must move from supply to demand. There is a nice drop. There is price making contact. This is 9 a.m. that morning. Let's just get a one play bar. Right, and then this is now the 1 p.m. candlestick, so that's going to be, this is on the H4 time frame, by the way. So this is literally all the way, if I go to the 1 hour time frame, all the way up until 4 o'clock, and then after that I have class. I put out a couple of things. Now look at this carefully. I'm going to go bar. Pause. This is 8 p.m. This candlestick here by itself is 8 p.m. So markets start to leave a supply, and somewhere here, markets shoot back up into your supply only to make contact with your demand. This movement for this whole hour has fed 8 p.m. was when the interest rates were not going to be moved, which we knew they were never going to increase interest rates. And then half of this time frame here is the Fed talking. So it's from 8 p.m. to 9 p.m., this big candlestick. Dollar is weak. Because dollar is weak, people see that big reaction on EURUSD. So that was the spike I saw when I was teaching. For those of you in class last night, I'm like, what on earth is going on to EURUSD? Why did price just run to the upside? And the truth of the matter is, we go back to the H4 time frame, just to seek clarity. Markets simply created a bearish engulfing pattern, which was their right when leaving a bearish engulfing pattern. Their right when leaving a supply to supply. It doesn't mean the tapering isn't going to work, or there's no tapering, or whatever else the Leroy in you is doing, the one who's going crazy. It simply means markets are fundamentally aware of what's about to happen, but the structure is in place. The reason why we need to start introducing COT stuff is not that COT would have helped you, but COT trains your mind to realize how slow banks move. What are they going to do with the money here? Yeah, fine. The Fed has spoken, but what about the money that was left here? So here, when I say money, I'm talking about sell orders. Was there not sell orders there? There was a plethora of sell orders surely put there on the 1st of November. Do you think they did not know that in 48 hours, the Fed is going to taper? Of course they did. But this is it. This is a reaction to a bigger supply, a daily supply on DXY. Your structure, guys, will continuously govern you. Yeah, you can go for, like, I'll show you what I was trying to do on the smaller time frames. And last night, actually, you know, if I wasn't holding my EURUSD profits or swings for that long, I would have been miserable, right? Because this account that I've been slowly trying to grow from $1,000 to almost 5K, now it's 5.8. $5,800 because of some of the stuff I did last night. Fundamentally, I've been pissed off if I didn't have those long-term euro swings, because this cannot be substituted for anyone. Structure is a play. And so yesterday, first this dropped, and then, so what are they doing? Surely we can both agree that if this was a demand, which clearly it was, it's now a very, 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 very weak demand. They collected all the buy orders here. It's not really something you want to see in a bullish trend. In a bullish trend, you want your demands to be kissed, and then price leaves. You don't want them to come deep down and completely reorganize, the shape of your area of value. But essentially, that's exactly what happened. I think this is the full auto replay. Let's see. And this is where price is today. Today being the 4th of November, Thursday, the morning after. Markets have finally left it in mind, which means if you go back to your charts now, if you look right now, EURUSD is back to falling, pound 24 hours. But how many accounts or equity or how much panic did this 1 hour candlestick on the DXY cost you financially? It cost me financially, it cost me 161 US dollars. I guess it's not that much, but still, it still cost me. It still cost me, right? We'll come back to all of that stuff. We'll come back to it. But this is very important. So I want you to first know structure move first before FOMC started talking. At 8 p.m., markets made contact with a supply, a valid H4 supply, and this is what I say in module 2. We go through the remote course. At the beginning of every single module 2 that I take, all supplies and demands are equal. You don't mistreat them, you don't undermine them, you don't assume where price is going. Now, why do people risk a lot of money in the markets? Why do people increase their lot size? Why do people go bananas? Anytime you go bananas, it's not this, greed, blah, blah, blah. There are all these basic things that we can talk about in terms of trading psychology. The reason why most people go lot size bananas is because you think you know. You've got conviction. The only thing that moves price in the market is conviction. But we're talking about the conviction of big players. But you think you know. You think no matter what, given all the data in front of you, given your amazing trading strategy, you now know that this one trade you are taking with big lot size is very important, right? Is going to be a winner. You are betting your entire account on one trade. Do not do this. I'm not just talking about don't use big lot sizes for nothing. I am saying kill that mindset that you think you know to a point where this one trade is the one that the FOMC is talking tonight, is going to taper, because that literally starts to speak so much louder than the trader in you. This is the trader in you. The trader in you is still mechanical. The trader in you requires so much love and support and kindness. And that love and support and kindness is like how you raise a child, right? Your child will take a pen. Like if you look, I don't know if you can see it there, the below my whiteboard, it's like someone grabbed a whiteboard mark and drew on the wall and missed the entire whiteboard because there's still this short. I can't go bananas. She's seen me many times writing down the whiteboard. So she now needs to know, no, we go on our tippy toes, we draw on the whiteboard, we don't draw on the wall. And that type of love and care and attention, you give that to your trader, to the trader in you, consistent reaffirmation. Look, be patient. Your rules are working. Yeah, I know it's 0.01. Your rules are working. Eventually, your account allows you to do this. Your rules are working. Eventually, you'll get here. Your rules are working. This is a process. But the moment you see yourself going bananas lot size because it's a news event and you think you know everything about the markets, you think you know, it takes one big whale in the markets to outbid you. In terms of trade psychology, it just takes one trader to completely outbid you. If you see price turning, man, I don't want this video to be too long, but I hope everybody in 365 Academy watches this. Anytime you see markets turn, doesn't matter whether it's an upward turn, it means nobody in the world, not a single soul in the world thought it was worth buying any higher. It was worth pushing this to 0.02. Do you know how crazy that is? That at some point, yes, some people thought it was going to turn here. They started to sell. Markets blew them. Started to sell at many points, at many junctures. As traders across the world, millions of us, we will all be losing out. Your trading style will tell you there's a support. Your RSI will tell you that this place is now overbought. Your MACD divergence will tell you different things, and all of us for different reasons will keep coming out. But at some point in time, when price turns, there is not a single buy order to push price up. The ultimate bidder, whoever has bid price to the highest point and is now ready to sell, that's when you can see it. Okay, fine, there it was. Everyone in the world, There's not a broker. There isn't an outrage right now with an order book with anyone trying to buy Euro USD any further, because there's a psychological level that, okay, fine, we finally got to the highest point. You think you know that? You honestly think with over millions of traders, you know everything about that one trade for you to be able to risk 50% on your account on it? So it's crazy. It's wild. So the correct thing to do is to shut Leroy up, Leroy being you, the individual, and to start to increase the mechanical side of the trade. And the best way to do that, instead of going bananas on one lot size, you trade in clusters. Cluster 1, first 15 trades. All of these trades have to be equal. They have to be rule-based. They have to look the same. If it's a supply, I take a sell. If it's a demand, I take a sell. If this supply worked, this demand worked, this supply did not work. This demand worked, this demand worked, this supply worked, did not work, etc. You take classes, you go, okay, fine. I took 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trades, supposed to be 10. Right, I took 10 trades. And out of 10 trades, I lost 1, 2, 3. So you won 7 trades versus 3 losses. Okay, my system is working. Let's figure out, what did I misread? Was it not a high enough sell? Did I not use a Fibonacci confirmation? Was I in line with the governor? There's so many things you can do. And then what you do again is you trade in clusters, which means what? Which means news events like last night, especially if you're starting. And again, you're a beginner for the first 365 days, you start a live account and you're serious. So if you started a live account in June, but you're not serious, you were breaking rules, you're not mechanical, you haven't started. You have not started. Can you see me better now? You have not started. You might have blown an account, you have not started trading. You are playing with your money, you are testing, you are having fun, you are in and out, but you haven't started trading, all right? When you start to trade, whenever you decide you're tired of the ups and downs of the markets, of Leroy getting in the way, and this took me 3 years, took me 3 years, 9 months for me to finally be tired of Leroy getting in the way of the trader in me. It's a process and I didn't have 365. Like I eventually, it was only in this last 9 months where I finally raised enough funds to join Online Trading Academy, which cost a lot of money. And I was like, ooh, right? Finally. But the whole 3 years, I was bouncing from different strategies. I was just, all over the place, a lot of free stuff, baby, pips, YouTube, everything. I'm just accumulating knowledge that I couldn't translate into profits. It took me 3 years to get out of my way. You could do it less. The program I've designed and the rules are in place for you to do it in far much more less. I generally ask for a cluster trader process after you've done the full course to last for 3 to 6 months. Trading clusters. And what that means is the clusters, you've seen scientists. I mean, I'm a social scientist, but natural scientists, the guys who do physics and chemistry and all that kind of stuff, they move in data sets. That means there's always a control. Right? So because you want to check the variables. If I just choose the H4 time frame and I trade all the daily value supplies and peaks and whatever on H4, what are the results in 3 sets of 10 clusters? With good risk management, you're fine. It doesn't matter if you're taking losses as you're trading the stuff. It's even better if you paper trade it first, right? But with good risk management on a live account, you should be fine with my supply and demand. It doesn't matter. And then you're like, okay, so these are the results of 3 clusters, which is 30 to 40 trades that I've taken on H4 time frame. Let me back test this. If you read the books that I keep telling you, look, I went to the car to get this book. Look at it. I've read it so many times now. It's torn. My book is tearing. It's tearing. But it's such a simple book. But every time I'm in bed meditating, I'm like, oh my goodness gracious, that weird story that Barnes was talking about, how to backtest the spreadsheet saga. The spreadsheet saga, I know you guys don't use spreadsheets. The spreadsheet saga starts from just before this chapter 18 when he talks about homework. Right, and he's talking to the Italian trader and some other trader, and they're back testing. Well, they come up with a name for it. But if you don't mind, it bothers me when I forget, when I've got the slip of the tongue and I can't remember what it's called. So this is when he goes to talk to George. It's called short-term trading from long-term time frame. Short-term trading from long-term time frame. And so they're mirror matching H4 to daily, which has always been the 365 standard. Always been 365. So if you were to just short-term trade in long-term trading, and explain it, but it's basically what I always tell you to do. You find a daily area of value, you can break it down a little bit to get a good entry on H4, which means you'd have caught that DXY supply because it was on H4, and then you have a stop loss outside your daily supply, and then you take your trade. And your cluster shows you that, all right, man, after 3 clusters, which is 30 trades, maybe you lost you won 6, you lost 4, and then eventually you won 8, lost 2. You can actually see these trades. It's impossible to prove me wrong, but I want you to try your best. These wins with risk to reward ratio of 1:3 naturally mean in your first 3 set of clusters, your capital has grown despite losing 3 + 4, 7, 9 trades. You're done. But you can't, as long as you have this idea that this one trade that I'm about to trade is going to be the one, and you go bananas in lot size, you kill your count. You'll kill yourself. You'll kill yourself, and this person's ego gets bigger and bigger. Imagine being wrong in the markets makes you more dangerous. Winning all the time with no reflection in the markets makes you more dangerous. Both states, complete devastation and euphoria when you win, are terrible for the trader. The trader doesn't care about that stuff. The trader cares about a mechanical system. Atomic habits. If I can just keep doing the same thing over and over again, I'll be fine. Right, so this video is getting a little bit too long than I wanted to get, but I hope you guys get the basic process of what I'm talking about here. This is exactly what happens all the time. The best way to do it is let's enjoy the news events, number 1. Number 2, just enjoy them. Don't trade them. Enjoy the news event. It's a good news event. You like the news event. Enjoy the news event. Come back to your chart. Right now, real quick, guys, because you know I ended up going a little bit way off than I wanted to. Yesterday, Jerome Powell said the next few things. You want to write this down. You don't want to write it down. You put the video to rewatch it. It's up to you. But it's just going to be nice and short. Very key points. I mean, most of the big points always come from the smart questions financial analysts around the world ask the chair, right? So this is just a combination of both. I only have 5 points. Number 1, tapering is going on. So we are right to taper. Taper is happening. So we are right in our analysis. Dollar will be strong. Euro USD, pound USD will fall. And what's nice about us as traders is we start to forget that Euro USD and pound USD, the trades that we're supposed to hold, we are supposed to hold them despite or in spite, or whatever the right word is, of what happened last night. Euro USD supply governor is in charge. This is why we are selling. We don't change for anything or for anyone. If your sell is affected by last night, like the one that I took, all my sales from last night that I took were completely buggered because those were low sales. But if you found the true sales, the ones that our analysis showed us 3 weeks ago in the war rooms, I'm still in that sale. Markets did not come up anywhere close to that daily 365 candlestick. They didn't. I'll show it to you right now. Markets did not, because that's a true sale linked with my governor. It's got nothing to do with news events or fundamentals or market manipulation. I'm just blinkered. This is the trade setup for this chart. Supply and demand. As a mechanical trader, pound USD, I'm holding because this is the trade setup for this chart. It's supply and demand. Yes, we're tapering. Dollar is going to be strong. That's going to fall. But that was going to fall despite everything. What the dollar does being strong and the taper is we get aggressive moves and want to catch that volatility as a trader. Sure, but the plan does not change. Right, so how the taper look like? They're going to move from printing 120 billion US dollars per month on stimulus packages, right? And 120, by the way, was being split 2 ways. 80 billion was going to treasuries, 40 billion dollars was going to mortgage, right? So mortgage-backed securities. Now, so you can think of this as like slices of mortgages being paid off to bonds and not banks. Now they'll start to taper at 15 billion US dollars at a time. So 15 billion month to month. So the month of November, 10 billion for treasuries will be cut off, 5 billion for mortgage-backed securities will be cut off. And then in December, another 15 billion, 10 from treasuries, 5 from mortgage, and I'm pretty sure it'll continue like that. So every month we expect a $15 billion reduction in this whole tapering process. If you do the math, it means tapering should end in June 2022 next year, at the end of the second financial quarter, which is not a shock. Right now, if you look at it very carefully, I mean, Nasdaq ran on a lot of positive stuff. There was a moment where it dropped, and with one contrarian trader, just one in the senior traders program, it just drives me nuts. It just drives me so nuts because, and if you're watching this, man, love and respect. But I told him yesterday in front of everyone, it just drives me nuts that he does this, but he's very good at it. I'm not good at what he does. He goes high risk. He's a scalper, essentially. He's a counter and scalper. And so when Nasdaq kind of like, shook up a bit, that's when he went crazy. There was a beautiful long-term bullish upswing. For those of you who wanted to get into, I actually didn't even jump into Nasdaq. I was too focused on, I hardly ever trade during news events. I like to sit and just soak it in and then plan my trades the following, because this money is not going anywhere. It takes forever for banks to start to rearrange money, etc. But there's some people who listen and trade, and I tried it out yesterday, and I don't think I'll ever do it again. It's not my thing. Even though my losses were small, it's just not my thing. I did not enjoy trading while soaking that stuff in. But anyway, he made $12,000 last night on a big short-term sell on Nasdaq before Nasdaq took off, because there are some things that Powell said that were good for the dollar. There's some things that Powell said that were not good for the dollar. When Powell is talking about, we're not talking about interest rates, we are not talking about a lift-off, we are not ready to talk about those things because we want to taper first. Obviously, the currency didn't like that. When you're talking about, I think the question that triggered the Nasdaq to rally, and it's still rallying, it was a very good question, was when we look at your history of tapering, this particular taper is twice the rate. Like tapering should last a year. We're doing like 6 months. It's double the speed, right? And he said, and his response was bullish, and therefore stocks took off, right? He said, well, we're tapering at twice the rate because jobs and economies are doing well. We feel like, although, statistically speaking, 4% unemployment rate, if you just think about our African countries, in South Africa, we're looking at a 40% unemployment rate. 4% is pretty brilliant. And their plan as the Fed, and it's part of their agenda, is to get to maximum employment. So they want to drop all that stuff to zero unemployment. So it was just all bullish, right? So indices just went crazy. And then he did say, in this important part, if you're in the Wealthy in 3 Years program, if you want to join or you don't want to join, but you are interested in investing in crypto by yourself, it is also fine. I want you to know this, because tapering is going to end in the end of the second quarter next year, June. Understand, we're tapering because of inflation fears. Inflation requires smart investors to put money in assets that have a hedge against inflation, and that's cryptocurrency. You can't debate with that, right? Cryptocurrency is cryptocurrency. Cryptocurrency is the massive biggest inflation hit, which means it's going to be very bullish for crypto between now and June next year. So that's kind of like a subliminal message without, if you don't know how to unpack all these macroeconomic news, crypto is going to be bullish. You want to buy, hold, buy, hold, buy, hold, buy, hold, buy, hold. If there are dips, don't panic, buy the dips. Don't sell, buy the dips, buy the dips, buy the dips. We've got a clear path where we are plagued with inflation until June, until we've done reducing taper. When, after tapering, he decides to increase interest rates, then we might see another crypto winter. But between now and June, very good time to get in before things explode. And I think things are going to start exploding November, December. I'm telling you now. Right. So that's kind of like it. Like, so it gives a good serious gains for crypto, fourth financial quarter now, Q1 and Q2 of next year. And that's it, guys. I mean that's the kind of like big thing, right? So let me just quickly look at my notes. All right, so I've told you what Powell said. I've kind of like broken down the trader in you and why the trader. Let's look at my screw ups, because my screw ups are fundamentally quite interesting. I think they are. And yeah, but by screw ups, I mean it was just markets dancing with me. So yesterday, I started to have fun. I don't know. I said I'm on the 5 minutes chat. Someone in the private Telegram group said something so smart. They're like, no, Leroy, I'm just simply going to stick to my, sorry, I'm just looking for power enough. There we go. I'm going to stick to my daily time frame. So you can see as markets were falling yesterday, I started to kind of like overload, sell position, sell. And as that whole process was happening, of dollar falling, etc., and while Powell was talking, now this is not like, this is literally during when Powell was actually talking, somewhere there into that whole hour as dollar fell and Powell started talking at 8:30. This was mad, titanically bullish, right? Taking out all my sell orders. Naturally, I was risking very little. Big lots once in a while. I mean, not really. They okay, fine. Standard lot size 0.50, sure. But also hedging them. So I mean, I lost about 100 and something, but I made sure I had one positive trade to kind of like balance me up, right? So that's kind of like the night I had. Nothing has changed, but just to also prove that all things being equal, I am literally, where's my bigger account now? I'm still holding. I am so confused. Oh yeah, okay, cool. So you guys can see this screen now, right? Yeah, so I'm still holding. I've covered lot sizes because this is weird. Like when people see their sensei using big lot sizes and then they just assume that's it. Like you have no idea my capital range, my ability to take losses. That's not important, man. You see, a lot of people try and lure students in by these big amounts and all those things, and those big amounts, some of them are fake. Just be very careful about that stuff, ladies and gentlemen. Be very careful. What you want is for someone to teach you the methodology, the engine of the market, so you can do it for yourself at your pace. But there's that big sell that we had there. On the 365 candle all the way up there. You can see this was yesterday on EURUSD on the 1 hour time frame where market spiked down. It's literally, I've got another sell limit order here. No, a sell stop, sorry, order there that was triggered. Prices dropped nicely. All these trades of mine are still very much protected. And then markets turned here. Right, markets turned somewhere there, making contact at 50% Fibonacci from the 1 hour time frame. And so back to, I mean, I don't even think I lost enough last night to make it 0, I don't know. It was less than 1% of my equity. Like it was just for fun, but I would never still advise anyone to do that again. Just maintain structure. Nothing has changed. I mean, I hope this video has been useful. I don't remember what else I wanted to show you, but I do feel like it's starting to run a little bit long. Let's talk about Nasdaq. Yes, Nasdaq in the group, guys. You guys are becoming so much the private group that I want you to become. Like most private groups take time to evolve, but when they finally evolve, this is the kind of stuff you start to see. Traders sharing true experiences, not always about winning, about learning. There were a lot of beautiful hidden truths that you guys brought up last night. I mean, obviously, I have to wind down. I had to do some yoga last night, and I passed out on the floor. My partner came to wake me up at around like 11:30. I was like, "Nah, I'll just respond in the morning." But if I could quickly share this so you guys can see, you guys literally, like I was absolutely, predominantly proud of you guys. Right, so you guys were talking about Nasdaq last night, and the troubles on Nasdaq, and there's a couple of things I wanted to pick up. Yeah, okay, I'm not frustrated. Nice, man, nice. There's good spirits in the group there. Okay, anyways, I can't find it and I don't want to waste too much time. But anyway, you guys were talking about trail stopping on Nasdaq and just in general. Trail stopping on Nasdaq and just in general. So I want to quickly address that as I conclude this video. And I really hope every single student at 365 watches it because it's very important. Nasdaq. And you can actually see the last time I was in Nasdaq. And Ronald, buddy, thank you so much for being, the person you are in the group and just sharing your experience. So Ronald, I found out last night or from reading that you've actually kind of like left currencies completely to focus, which is actually quite brilliant. Right, so these arrows are just basically all the trades I've taken in Nasdaq so far, buyers and holds. This was my last time buying into Nasdaq. And then I think I had a sell somewhere here, but I forgot to mark it out somewhere down here or something, short-term sell. But anyways, I'm no longer in Nasdaq. So I held this buy from there to there. And at some point I closed, right? And I just haven't gotten back in. Time, care, I don't know, whatever it is. Right, so Nasdaq has done an all-time high. SP 500 an all-time high. All good news, right? So this is like that Jerome effect, right? This drug, right? This guy thinks the economy is doing well, we're doing well, let's get it, right? This is crazy. We know this is too extended. If you don't know, I'm telling you right now, this is too extended. This is good news and all that kind of stuff is too extended. We also know that Friday there's NFP. I'm not saying price is going to drop because of NFP. I don't know that part. I want to buy Nasdaq again if it drops down here. And I am now forced to adjust my plan. And that's another thing about trading. You constantly have to keep adjusting your plan, because if markets, if you don't want to be left behind, the next time to really look into buying Nasdaq, and I lost all my 365 numbers in a class. Could you believe that? And I've just been so lazy to redraw them. Right. So whenever I'm faced with something like this, I hate it, because I fundamentally just want to wait for the lower buy. But this is as good as any. Right, let's draw a couple of fibs. So let's say from this area here, and this is inaccurate, because remember, we don't have a swing high at the top. But I like doing this sometimes to project. I like, all right, so if tomorrow is Friday and we start to get a big red candle on Nasdaq, right? That's a good swing moment, right? So maybe price starts to drop there tomorrow being Friday. Right, and then I look at my areas of value. I'm like, okay, fine. This is by that 50% mark, which is dope. And then there's really not much happening here in the golden area. And as I switch to H4, all right, maybe using the brush as a tool is never advised. It just leaves such a big mess. Thank you for rocking with me. If this ends up going to YouTube, please don't forget to like, share, really subscribe, and notification button. All right, so cool. There's my golden ratio right here, right? And it's gonna come back to where I first bought. Interesting. So I probably should I need to add a new pending order, right? Because this area was never tested. All right. So that's kind of like, if I'm trading indices, and Ronald is right. If that's working for you, my bro, you know, good for you, man. Please don't change. I just would like to propose something better, not better, but something different. So not better, but different. And because I used to do that, I used to like literally say I'm working, and it's a lot of work. Managing your trades on a daily is a lot of work, but it's also like the style of intraday trading anyway. So if it works for you, it works for you. I just grew out of like, you know, of that type of trading setup. Right, so I've got an H4 order block somewhere in here, right, which is literally at the break of the trend line, right? Because, and those of you coming to tonight's classes, there's one more thing you need to know about EURUSD. One more thing. I'm going to conclude with Nasdaq, if I can just come back here. One more thing, because tonight we're doing market structure trend lines, and a lot of people, because they're right at the end of the course, right at the end. Remember, we all sold up here. Please don't forget, we all took sells here. This was the 365 signal to sell EURUSD. This is the daily time frame. This is what happened yesterday. I want you to see it for yourselves. And in terms of perspective, zone out. The accounts got blown yesterday because of this green candle here. Yesterday, but we sold up there. Look at the difference between where we sold and where accounts got blown. And look what's happening today. We get a bearish engulfing pattern. So if you just protected your true sale and went to sleep and played tennis or with your and just had a good night, you would have woken up nonetheless richer. All right. In fact, yesterday was a good retrace and markets rejected. Markets got done playing with people's accounts. Markets are coming back down. This is literally more profit. This is what I knew was going to happen. I was just trying to get as many big sell orders in yesterday to then wake up in profits today. And obviously I chose the worst spots for it because I was using a terrible time frame and I ended up losing about 100 and something. Oh, I lost 100 and something, but made $73 in the process, blah, blah, blah. So I lost $69 in total last night. But in general, markets have continued. Whoever sold here, making kind of that daily supply is in profits here. Let's give you pips. Maybe if I say it in pips, you'll understand. Last night, markets moved however they moved, but in general, we are now in our long-term sell are still up 112 pips. Understand? It's still going on. But EURUSD, what you need to know from a technical perspective, which I did not like or have not yet ready to accept, and I'll be teaching on this tonight, trend lines and market structure. This is a low. And when I teach, because I teach this is one of the last things you learn before I teach you how to trade indices in the course, right? So we are finishing our course this week, I think. This is a low. And in a downtrend, what you always want is for this to continue and make a new low before going up to retrace, because you want to have a system of lower lows, right? So you want to have a high, up there's a high, you might, this might be a lower high, another lower high, and then price came back and another lower high because it didn't close above here. And so you want to make sure you keep that structure intact, the downtrend structure. And that's exactly what I'm seeing. But what a lot of us wanted to see was price just really dropping all the way and creating a new lower low. And I think we should be patient. Let's just be patient and see what happens. But if markets fail to create a lower low, then we have problems. Right? Look at the weekly time frame. I mean, traders, you have to kill the Leroy in you. The Leroy I'm talking about, let me go to a clean chart. I'm talking about the trader who interferes with the rules. You have to kill that person. Look at this stuff. Look at this stuff on the weekly time frame. We spoke about this. This is a bearish engulfing pattern. We know our bearish engulfing patterns. This is the weekly. So this is the last week. This is how last week ended, when that big sell started on Friday, the one that we are all should be in as 365, because it's a clean a war room signal. Markets have then decided, and I want to make sure I slow this down. Today is Wednesday. Today is Wednesday. So we're about to see, today's Thursday, we're about to see the candlesticks combined of Monday, Tuesday, Wednesday, and the few hours of Thursday. This is what happened this week. The candle that's been formed right now. Pause. Markets started off wildly strong this week. Monday, Tuesday, Wednesday. Wednesday being FOMC last night. Why? Why? Because that's how our trading strategy works. Bearish engulfing candles need to get retested. This is the same weekly candlestick now, as we speak right now. After that retest, price is starting to drop a little bit up and down, and this is its final looking state. And we now just have just over 24 hours before this weekly candle closes. So we need to see how markets are going to close today. Right, this means nothing, right? This could be green by the end of the New York session tonight, and how markets are going to close, more importantly, tomorrow. And who's going to be the final catalyst to all of that? NFP. NFP. All these things are happening. Tapering is still going to happen. The dollar is still going to be strong. But if you can't pick your levels correctly, if you think because the FOMC is talking tonight, you're going to make money tonight, you're going to lose a lot of money, right? So to wrap this up, really thought I was going to talk for 15 minutes, but I hope this has been helpful. I hope you watched to the end. Here's Nasdaq. So a lot of you guys are talking about because indices move fast. So that's why I always tell you guys, some of you I saw in the private Telegram group, you're talking about your accounts. You want to first grow your accounts up 300%. Some of you have doubled, tripled, and I want to get to 300% growth before you can come to indices and all that kind of stuff. And that's pretty much in line with what I've said. And I'm very happy for you for that. What you need to know about indices is there is just like currencies. And I really feel like I should start emphasizing this a lot. For a swing, you must find the true buy, the true sell. There is always moments in a chart where markets will not return to kick you out. And this is done in market legs. It's very important. Tonight's class is on market structure. Please make sure if you're registered, you show up. The important market legs and market phases. There's always a phase or a leg in the market that will propel price up or down. Now you can see I closed because again, logic and profits and just wanting to wrap it up, forced me to, right? Because we're about to get to a supply, and yes, it could have worked, it could not have worked. And I did see this bearish engulfing pattern. I thought, oh, wow, that's nice. Let me not close, because after all, markets will come down and then retest and then go up. And then instead, markets barely even made it, kind of like tested the big candlestick, didn't make it to my area of competition. I had another pending order here, and then I closed this. So I closed from this buy to over here, thinking, oh, this is nice growth for my capital. Anyways, I've got a new pending order here. When markets retest this, I'll go up with markets. Markets didn't come all the way up to retest me, and I was now out of my long-term swing. So long-term kind of like 1, 2, 3, 4, 5, 6, 7, 8, about an 8-day hold in Nasdaq, right? And so that was it. I haven't had a clean entry ever since. I mean, I prefer H4, H1 on indices, but this is the kind of thing that you need to be thinking about all the time. When you want to hold a trade, I mean, this is a broken supply. Please note that markets could also bounce on top here. Markets could, if they want, bounce right here, right? But in general, you have to find a fundamentally, and for me, it'll be module 2 setups, right? Module 2 setups have a better chance of not faltering. Now look at what you have on the H4 time frame. You have I guess a miss, right? Consistently, you know, knocking out traders before exploding, right? That's the 3:30 a.m. 3 o'clock. 3:30, whatever opening. This is the H4 time frame, right? So H4 right there, and then markets do the same thing. 11 markets explode up, and you've got all these levels to choose from, and I'll choose none right now. The lower price goes, the better, but you need to be present to catch it. So this is not a good place for me to buy. I can buy it there for the day. You know, I can risk to buy it there for the day. I can try to buy it there for the day. This might be the first time I'm interested in a drop. A drop like this is far much more suitable for me. This, you see, because the next immediate demand is always going to be short-lived. It might work, but it's too close. Exactly what Ronald said. Whenever indices are way too close to an all-time high, you are part of that, the sheep that need to be slaughtered for price to really rally. You don't want to take buys this close. Now, we can't really draw a Fibonacci on the daily time frame, because on the daily time frame we don't have a swing low, but we can see that here on H4, could just to mark up some zones, we could play around with it. You can see that between there to there, even though this is not a proper swing low, markets kind of like found a nice base in there at 50%, then rallied up. They go 38.8% our PCP level. Markets gave us a PCP at a little area, then went all the way up. You know, all the stuff we've done. If we extend the Fibonacci all the way through there from this first break, which I think was a broken supply. Oh, no, it's not. It's a bullish engulfing pattern. So that's nice, right? So like I said, if prices start dropping right there from tomorrow, and you use this bullish engulfing supply on the H4 time frame, we can then start to see where the golden ratio is. So this would be nice. A complete eradication of all these points will be very nice to kind of like jump in. Once that is done, and that's the next and final thing I want to talk about. So it was Mr. I think Liwa Paul, Edwin, yes, in the private group, he kept talking about, look, man, and then you're trail stopping and you're holding, you're trail stopping, you're trail stopping, you're holding. And then all of a sudden, because of the reduction, markets come back and wipe you out. I have very good advice for you. You're not going to like it. I have very good advice for you. You are not going to like it. Stop it. Stop trail stopping. Trail stopping is just your pituitary gland telling you that you think the market owes you. You think that's your money. That's why you're trail stopping. And that's okay. But that's not how a trader should think. Equity, and that's profits running on your MT4, MT5 that have not been realized as capital, it's not your money. Right? So you could have $100 capital, but you're in positive trades, and so your equity in total is $189. I want you to know $89 is not your money. Yes, some traders will tell you close quickly, blah, 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 trail stop tight so you can make something. So it's better, it's far much more better to close at 150 because of a trail stop than to lose all of it. This makes the same amount of sense as taking risk to reward ratio trades of 1:1, risking $1 to make $1. You and I know without any shadow of a doubt that we are literally, this is a bullish buy profile asset. If we know this, we need to stop doing that. So if we are lucky, and I don't think we will be, but if we are, because price already at 16,200, so you need to back test this kind of stuff. You have to ask yourself this, when markets break out of a range, so this was the range, see here? So I'm giving you guys a lot of my module 3 now. Scenario analysis is so key. This is an indice range. Do you understand? I mean, look, the number of 365 numbers here from 1500 all the way to 1600. This is a range. You need to calculate that. I can do it for you if you want. I mean, I back test my stuff all the time. But if you break down the markets in these ranges, 1500 to 1600, so the next range would be 1400 to 1600. You want to see how many demands were retested. You want to get like an average, like within the range, before price breaks out of that particular range and goes into a new range, how many times does market come back? There's always one or two true supplies and demands. If you look here on the 14, I really don't want to mess up this chart, but anyways, I just didn't want to forget where I bought and sold on the chart, but I want to remove everything. But if you look very carefully here, if I just do this for you, sorry, I'm just trying to be as accurate as possible. Probably save me more time if I just go to coordinates and I just map it up. So if you just look at the range, I mean, I've taught you guys how to trade indices, so you know money flows under the sun and all that kind of time frame and all that stuff, right? And this actually works better if you use horizontal rays, to be honest with you. No, not like that. Like I want a horizontal line, a vertical horizontal line. So we're just going to assume this is as accurate as day. It's that pink line to this pink line. Right, so inside these pink lines, we had price declining into this range, into a demand, right? There's clearly a historical demand all the way at the back there that I found to save time. You can find it on your daily, but there's an H4 demand somewhere there, and this is a whole daily order block holding price up once, twice, three times, a lady, right? And then price eventually comes back down. Somewhere in here, markets have not returned back into this range. You had that buy, this buy, this buy, and this buy. And again, this one, if you wanted to, is a bit high risk, and markets have not yet come back into this range. Markets have, however, started a new range from 1500 all the way to 1600. And you remember, I mean, I don't want to give away too much, and markets have broken out of this range. Right, now look carefully at how this range went. So as soon as it started, complicated 365, complicated 365, drop in, value-based demand, complicated 365, bullish engulfing, Talitha area. Right, so you can tell, generally speaking, and you can keep doing this, keep finding these ranges and finding your charts and just analyzing them. There's always one or two true buys. So this buy has never been taken out from time immemorial. You can't even, like, I exited on my own accord, but markets never stopped me up. But emotionally, watching price do all of this would have stopped you up. You would have been like, oh my God, my profits, oh my God, my profits, and then you close, right? But the markets continued without you. So if you were to take a buy here and you started this business of trading your buy orders, you will run into mistakes where you lose. And then obviously you're going to watch price go up 200, 300%. Now, this is not too long ago. This is the 6th of October. So this buy here was just a month ago. Some of you are now getting very good at holding your FX currencies. The problem with indices is they move too fast for you emotionally, and you think that money is owed to you. It is not. All you need to do is, once you get triggered in a buy, protect capital. Take your stop loss, break even. Don't chase it. So just to be very clear, protect capital. And if you do this back testing that I'm asking you to do, or if you want me to do it for you, just comment there. Ask me if you want me to break down the whole of Nasdaq in terms of these clusters and give you statistics. Just comment on the video down below, and I'll do just that. But if you literally were to watch price come in, get you triggered, right, and then markets make it their way back out of this range to go play in the next range, all I'm asking you to do is to move on the time frame. So H4 is a very good one because it's quite substantial. I want you to wait for 3 order blocks, which means you're going to have to, for order block 1 to happen, you're still risk on. You're still 5% risk or 1% risk, and then price will explode up. When price explodes up, order block 2 will take up. When order block 2 shows up, don't go lock profits, break even. Break even. Don't add, break even. When order block 3 shows up, then you can start slowly trail profiting. This is crazy, Leroy, because what if this happens? What if I had $500 US and now my equity is $2,000 US, and all of a sudden something happens in the markets and this happens, that's fine. If that happens, take your time. You have 1, 2, 3 order blocks. Once you have 3 order blocks, it is the first time you can lock profits below order block 1. That is fresh. If a drop like this happens, hoping that this area of value will catch it. These are just all, I'm making up scenarios, but basically this is the best way to do it. Right, and then this demand is now broken. So now what you're waiting for in the market is your rule of 3. Simple. You keep it that if you really want to trail, keep it at the rule of 3. What's rule of 3? On the same time frame that I'm trading on, I must see 3 areas of values created before I can move my stop loss. So when that happens, and this is the end of the video, guys, I've missed the opening of the London session, but it was well worth it. It was really well worth it. I probably won't trade today. Really not much to do, to be honest. Right, so then there you go. And then you now move to your second order block, because markets give yourself room for price to retrace properly. This too tight. The next, it's just too tight. Markets know this. They will find you and use your liquidity. They know this. Give price, but it's a buy profile asset. What if you could manage Nasdaq like that for 3 months? How far would you be? And if you open a new trade along the way, then everything stops. Trade 1 that you opened a week ago, you can't move that until the trade 2 that you've opened gives you the first 3 order blocks, right? Because otherwise, you're just going to jeopardize the whole thing. And it's a very good system to adopt, even in currency trading. Lock in profits at the right time, no rush. H4, H1, whichever your entry time frame is, that's a good way to do that. But H1 is very risky, right? I see there are a lot of you guys who are now sending me on the private Telegram chat. I will read them. Lee, DXY started buying on H1. Naturally, I would have expected to see more or less of corresponding sort of NAS, but instead there is little to no reaction. What's happening to the correlation? All right, so Ronald, I mean, I'll respond to you in the private Telegram group, but stock market is not yet open. All right, so let me just quickly type that. Stock market not yet open would be my first guess. And then the second reason is correlation is stronger during the New York session. And 3, watch the video I am to upload now. Right, guys, 365, shake my hand. Thank you so much for watching. Mr. Ronald, I've just sent you a response. It's been nice. Dylan Sims, US30 is also ignoring DXY. Yeah, UX30 is a reflection, complete reflection of the economy. Yeah, US30 is a complete reflection of the economy for investors outside of export import relations. Cheers, guys. Let me end the video and then quickly deal with my students. All right, peace and love. Cheers.